Tell me more about MMF in a layman's language.
You don't want to even know how I'm doing. Anyways, MMF, money market fund. Okay, so money market fund, in a layman's language, I can say I can relate it to current account with banks. Okay, you can relate it to current account with banks. That's the most thing I can relate it with. But before I dive deep into money market fund, first of all I want to just refresh you on or recap on ecosystem of CIS, that is collective investment schemes. Are we together?
Yeah.
Yes. So like I said previously, that when I was explaining fixed income fund, I said that CIS thrive in an ecosystem, and the ecosystem has players, and the players in that ecosystem are the following. One, we have the regulator, which is the Capital Market Authority of Kenya. The role of regulator is to act as a referee, in that if any player, somebody plays wrongly or offend another one in the market, they can always report to the player. So they ensure that every participant in the market do what's expected of them. So that is the regulator, that is Capital Market Authority. Apart from the regulator, I said that we also have the fund manager, which of course we usually refer to them as unit trust, or we can also call them mutual funds. Okay, yes. So these fund managers, they are just they're the technical team in this investment. They're the one that are giving the instruction on how these investments are going to be made. They're the one charged with the responsibility of creating portfolio. They're the one charged with the responsibility of ensuring that investors get a modest returns on their investments. Are we together? So the person who is in charge, or the player which is in charge with the investments decisions, is the fund manager, or fund managers, or mutual funds, or the unit trust. Then another player we have is the custodian. Now the custodian is not usually a bank. Now custodian is where money from investors lands. Okay, so they usually offer custody to these funds that are being pulled. You understand? Yeah. So when an investor sends money, it doesn't go to fund manager's account. It goes to what? To trustee. I mean, not to the custodian. Okay. So money first land into custodian. So custodian is usually a bank. Their work is just to offer custody to the funds. Then we have trustee. Now trustee is the person that ensure that the policies of all the criteria of investments are met, and all the interests of the parties are met or are upheld. Are we together? So that is the trustee. So most fund in many circumstances, you find that fund managers and you find that the custodian and the trustee is usually one. So which is usually a bank. Okay. Then after that, we have now the financial advisors, which I said that they help investors understanding these investment vehicles. So they help investors to know the upside and downsides of these investments, and also all it takes for an investor to do what? To start investing, and all the onboarding processes, all that fund advisors help investors with all that. Then we have of course the investors themselves. Now these are the boss. They are the bosses now. They are the ones that are now pulling the funds. Then after pulling the funds, those funds are being used to be invested. So after understanding the ecosystem, Now I can now dive deep into MMF. Money market fund, of course, is one of the cheapest, I say the cheapest or the affordable investment that anyone can make, because this is the investment where we usually even have the minors. The minors are these people who have not, the people who have not attained 18 years of age. Okay, so this is the a platform where you will find even minors are there. Yeah, so it's very affordable, and it is the most easiest to understand type of investment. You understand? So money market fund, this is how money market fund operates. Investors pool fund. Now, various investors or people bring funds together. Then after bringing funds together, these funds are being used to invest in a diversified portfolio. Say diversified portfolio. Yeah, portfolio which is well diversified. So after this money is invested, then the returns that have been realized are being distributed to these investors in a pro rata basis, or in ratio of their contribution to the fund manager. Do you understand? Or to the CIS. Yes. So maybe if I just then move a bit ahead, I can say that money market fund invest in short-term investments. These are investments that mature within a period of 1 year or less altogether. Yes, so you find that the underlying assets, all the assets that are found in portfolio that is usually being created by the fund managers, include the following. One, we have treasury bills, the 91, the 182, and the 364 treasury bills. Do you understand? Yes, you see these one, they usually have good returns. So those funds that have been, some of them are being invested in these treasury bills. Some of them are being invested in what we call commercial papers, with mostly tier one banks, where they usually also give good interest, being that it is negotiable. When a unit trust is investing, they usually invest as institutional. So institutions usually are able to negotiate the return that they want, being that they're high net worth, because money has been pooled. You can be even having billions of money in that pooled fund. So when with that money, they can usually negotiate with banks, tell them that this is what we want, and with that they can even get good interest rate. Apart from the commercial paper, we usually have also this money can also be invested in bank fixed deposits. Okay, so this also will attract more interest, being that these fund managers invest as institutional investors, which in contrary to if someone invests as an individual, if you are not high net worth, you will always fetch interest rate which is lower. Most of banks usually, if you understand how banks business model works, you will understand that your savings that you have with them is what they use to lend those business people who also want to put this, which need capital to put to venture into some of the projects. So what usually happen, you find that the difference between the interest that the bank will give you on your savings and the interest that they will require the people they lend, the difference will form the profit margin for banks. So that's why I usually find that mostly when you save in a bank, actually usually get low interest rate, which sometimes can be even cannot outpace inflation in some circumstances where inflation is higher. Do you understand?
Yeah.
So with that, I now believe that you understand what is money market fund. Yes.
Oh, fine.
Okay.
And what are the pros of MMF?
Now, pros of MMF. To begin with, I can say MMF gives competitive return. Okay, yeah, they give competitive return. Currently, most MMF or interest rates range from 14 to 18% per annum. You understand? And another advantage, just like I explained before, just like FIF, MMF is also the interest rates are usually compounded. Okay, compared to bank return, which or bank interest rate, which usually are computed on a simple interest basis. Now another thing I can say is affordability. Okay, MMF, once you can just set up an MMF account, then most of them you can start investment with 1,000 or 5,000, which is not that high. It's low, relatively low, maybe based on various people's income level, but it is generally low. Yeah, so it's affordable. Another thing you have to understand that mostly MMF, they usually don't charge what we call maintenance cost, which usually banks charge, account maintenance cost. But in return, I will explain how with them they benefit. Another one is stability. But this one usually depends with the fund manager that you are investing with or you are investing in. Yes, so ensure that you do your research so that you ensure you invest with the fund manager that is really stable in terms of the assets that they are holding or even the company that is backing them up. Yes, that is very important. Then also what I can talk about is liquidity. Yes, a money market fund, like I said, the underlying assets are invested in short-term instruments or investments, investment vehicle or assets. Okay, so you usually find that it's just work like a current account. The only difference is that it gives you a competitive return, and at the same time, uh, uh, yeah, you have an option of just withdrawing or depositing, just like a bank current account. So the main difference is that with the money market fund, usually you get high interest. Do you understand?
Yes.
Then another thing I can talk about on money market fund is um, risk. Risk is low. Are we together? A money market fund usually invest in low risk investments like treasury bills. Okay, yes, these treasury bills are usually used as a benchmark rate, like a low risk investment rate. So it's usually considered one of the low risk investment. That's why I said that it can fall. It usually imitate bank current account. The only difference is that bank current account doesn't give you any interest, and at the same time they charge you most of them charge what we call GL maintenance cost or bank account maintenance costs. So you find that money market fund, actually let me tell you, if you are holding any money in bank account, be it fixed or be it current account, then it is high time you transfer those money to money market fund because you are losing a lot. Do you understand? Yes. So it's high time you change. You open a money market account, send those put those money into money market account. Yes. So those are some of the advantages or pros of money market fund. Yes.
And what are the potential MMF downsides?
Potential MMF downsides.
Yep.
Okay. MMF generally. Let me start. I said that risk. Okay, I can say generally that no investment is risk-free. There is, like you see in MMF, rates are not fixed. Like, for example, if you talk about bank fixed deposit, usually the fixed predetermined rate usually apply throughout the throughout the savings period. But for MMF, you find that rates usually fluctuate. In fact, rates are usually declared on a daily basis once the investment has been made. Every day, rate is usually announced and usually being published in Business Daily. Now, I can say that one of the potential risks is that rates are fluctuating, which also sometimes I can say mainly is an advantage, because you find that rates are usually, when market is good, rates usually perform well. From, I've said that from 14 to 18%, which is compounded monthly, which is very well. Then I can also talk about liquidity. Now, liquidity, like I said before, it can sometimes act as advantage, and sometimes it can be a disadvantage. It is a disadvantage for that person who is a spendthrift. These people who can't really leave their money in an account for some time. Yeah. So because this money is accessible, that person who is not having financial discipline to stay calm when you hold some investment, so that you wait for the investment to at least accrue some interest. So it brings the temptation of withdrawing this money if maybe you feel like there's some you need money. So, but this disadvantage can turn to be advantage when you are that person who is self-disciplined and you have financial discipline. You can commit. If you say you want to invest for, let's say, 5 years or 2 years or 3 years, or maybe if you're investing for school fees or something like that, or you're investing for a holiday or that, if you can commit and ensure that whatever you invested for, you maintain that investment objective, then that one turns out to be advantage. But if you're just investing in terms of investing, you are not committing this, then it can turn out to be disadvantage, being that that accessibility of this fund can make you to be always in need of withdrawing this fund before even attaining the goals that maybe you set. So in a nutshell, I can just say that, one, interest rates usually fluctuate, and I said this can be advantage or disadvantage depending on the performance of the underlying assets. Another one, as I've said, the accessibility of this fund can make someone who is not financial disciplined to always have the temptation of withdrawing this fund. Those are some of the those are few potential downsides or demerits of MMF. Yes.
Okay.
Yes.
Thanks for that.
Mm-hmm.
And someone might be having an interest of investing in MMF.
Yes, everyone should have interest, because if you don't have MMF account, I don't think if you are really serious.
Yes, can you let me know how they can go about it?
Okay. The first how to go about MMF, there are so many fund managers who are issuing MMF. So you can contact me. That is one of them. One of the reasons, secure reason. Your work is just contact me. Once you've contacted me, I'll give you the range of the fund managers that you can have. Then maybe I can advise you on the best one. Then you can start off, or you can get onboarded if maybe you don't understand this. Or if you don't want that way, then maybe you can just do your research. Being that now you know what there is something existing called money market fund, you can just do your research. If you don't want to go through me, then you can just onboard. There are some that can allow you to onboard or through online, but for maybe money issues need you to maybe do things. There are some people who don't trust online things, so you can reach out to me so that I can help you go through it. At least set up one money market fund. So long as you have bank account, ensure that you're also having money market fund, because once you open this money market fund, they don't usually go dormant. You understand? They don't go dormant because they are not having fund. So you just open one. There is no cost of opening any money market fund. Open one. Once you open one, if you get any money, put it there instead of leaving it in the current account, because current account usually charge GL cost, and at the same time there is no interest, meaning that you are losing money to inflation over time. So ensure that if you have some money, let bank account be as a transactional purpose. Have bank account for transaction purposes, but not for saving purposes. Saving and investment, the least investment that you can hold and affordable to everyone is money market fund. Yeah, so that's all I can say.
Okay. Thanks for that.
Okay, there's something you've not asked me, but let me just tell you. People will ask me that how do money market funds make money, being that they don't charge they don't charge transaction costs, they don't charge GL maintenance. How do they make money? Now, this is how money market fund make money. Money market fund usually, after pulling these funds, they invest these funds. Then after investing these funds, the return that they get, they usually do what? They usually deduct 2% of the return. So let's say, for example, if they invested, they invested, then they got 18%. Now that 18%, they will take 2% of it. Then that one will remain 16%. So that 16% is yours. And another thing worth mentioning is that the management fee is usually regulated by Capital Market Authority of Kenya. So they cannot exploit you. Yeah, so it's usually 2%, and maybe with some adjustment on VAT and that. Yeah, so that's how they make money. But this is, don't say that they take 2% of your principal. They don't take 2% of your principal. They take 2% of the return, whatever they have gotten from the investment. They take 2%. The remaining is yours. So what is again chargeable on what is remaining is withholding tax, of course, 15% of what you are getting. Then the rest come to your account. Yes, so that's how it works. And it's very important to know that. Another thing I should say, but I think that is the most important thing that really that you should know. But let me just mention it because maybe it can help someone to make the difference. Now, fund managers usually don't pay CIT, corporate income tax. They don't pay that. Yeah, the returns that they are getting is tax exempted, so that's why usually make them to make more profit as compared to banks. Banks usually pay CIT, that is corporate income tax. So it's very important to understand all these business models so that you be able to know where to put your money. So from today, put your money, open a MMF account, start from there. Then as you progress to other investment vehicles. Thank you so much. If you don't have anything else, then I think that will be the end. Okay, thank you.
Thanks.
Okay.